Reno Sparks real estate market headed in 2020? Stay tuned. You're about to find out. Welcome to this live broadcast from Assist-A-Sell, and this is a real estate market update for January 2020. And it's really a look back at December 2019. But more importantly, at the conclusion of the market stats and report, we're going to give you our idea on what we think is going to happen in the real estate market in 2020. So stay tuned for that. But before we get there, let's talk about what happened last year, because as they say, history doesn't always repeat, but it certainly rhymes. And I think that is the case for 2019 and beyond. So let's look real quickly at the numbers. Number one, home sales for December 2019 were 494. Now, what's interesting about this is it was significantly higher in December than it has been in many years. As a matter of fact, if you look at this little chart over here, you can see the spike, and this is actually October, but December was actually a little bit higher than this, and you can see it's one of the highest Decembers we've had on record in a while. So up 9.1% to from 453 from the previous month. From November, it was up 9.1%, but more importantly, up nearly 30% from 2018. Now, the sold price is at 394.5, pretty flat for the last tail end of the 2019 year, down just 1.4% from the previous year, but a good solid gain from 2018 at 8.1% higher. Active inventory. Now, these numbers are going to make sense because remember, as we said, we had a very strong sale month in December. Therefore, that usually indicates a lower number of homes on the market inventory. Excuse me. So we're actually down 25%. There's 1,000 homes on the market in November of 2018, and it's down 34% for the previous year, so 2018, and it was down 25% from the previous month, I should say, in November. So significant drops in inventory, again, to be expected when you have high sales numbers. Let's take a quick look at active inventory by price, and this is something we'll talk about more in just a moment, but you can see the homes on the market. There's not a whole lot on the market down here in the 300 less price range. A little bit more here in the 300 to 400, and a lot of inventory up here in the 400, 500, 600, 700, 800 mark. Ton of inventory up in that price range. The number of closed sales by price range, and you can see most of your closed sales. Now, what's interesting to note is look at how many sales took place and look how little inventory there is. So it tells us everybody's trying to buy in this price range, and there's just not a lot of inventory out there. Now, total inventory by for the year for price for 2019 was 5,810, up 11.3% from the previous year. Now, inventory just means homes that are available for sale, homes on the market, homes with for sale signs in the yard. Now, closed sales were actually up to 62,048. So last year, again, this is for Reno Sparks single family residential homes, no condos, lands, lots, commercial, any of that stuff. It's all single family residential, 6,248. So up 4.3%. So number of sales was up from 5989 last year to 6248 this year. So a lot of people ask, well, Ryan, what happened and why in 2018 did you get a massive drop? Let's go back up and take one more quick peek before I explain why. And this is going to help us understand what may happen in 2020. Look at this massive drop here. Started in September, October, and really dropped off a wall in, and this is number of sales in 2018. What made that happen? Well, if we go back down here and we look at a chart of interest rates, about the same time, look what happened to interest rates. They slowly started climbing in 2018 until they peaked out on November 15th of 2018 at 4.94%. Interest rates were the highest they'd been in the previous 10 years. They were well into the fives for a 30-year mortgage. And whilst historically that's a good rate, that was extremely high compared to the 3.5%, 4% that people were used to. So what happens is affordability gets hit. Now, affordability, the number one factor in affordability is interest rates, because affordability is based on what people can afford, and that's really monthly payments. The higher the mortgage interest rate, the higher the payments are going to be. So as you can see, interest rates rose, spiked, and it caused an immediate reaction in our real estate market. You can see that corresponds here to this tank and to the lowest level it had been in many, many years. So this year, look what happened is if you look over the interest rates, they dropped to their lowest level like mid-year, late this year, but they've flattened out at 3.72 right now. And so that's kept interest rates really low. So again, affordability comes into play. So one factor you can always look at going forward, and I think this goes without saying, is interest rates. Are interest rates going to be headed higher? That will give us an indication of what's going to happen in 2020. I don't foresee interest rates going too far too fast. Why? Because there's a number of factors. But number one, we have pretty good economic stability as of now. It's an election year. And it doesn't matter if it's Democrat, Republican, if you like or don't like. That's not what this is about. But it really is an election year, regardless of who's being elected. The economy tends to stay relatively strong. And I expect that to continue this year. I don't think there's going to be any major changes to interest rates or more economic issues. Of course, could always be some sort of a black swan event, which could make interest rates spike, which obviously would have an impact. But overall, I don't see anything major happening. So what's going to happen in 2020? And that's the big question in everybody's mind. Before we get to that, let me share a few more stats with you that I think will help us get a better understanding of where we're at, which will also tell us where we're going to go. Now, one thing I like to look at in terms of people ask me, Ryan, is 2020 is prices have gone up in Reno. It's tough to find a home to live in. Is it a bubble? Is it going to crash? The short answer is no. I don't think it's going to crash. I think you may see some softening, and we'll get to that in just a moment, but it's not going to crash. And the reason I said is if you look at price to income ratio, so a good historical barometer of the health of a real estate market, both locally and nationally, is price to income ratio. So if you look at price, and that means home price, and then income ratio is the median income. So how many years does it take the median income household to afford or to buy the median income house? So for example, let's just say median income in an area is of 50,000, the median home price 150,000. That would be a ratio of 3. So 3 times 50,000 is 150,000. It gives you roughly 3. So roughly 3 years to buy a median income home. Traditionally, about 2 to 3 range. It fluctuates from 1960, 70, 80, all the way into the early 2000s. Well, what happened in 2000s to push these to 3.8, 3.6, 3.6? Well, lower interest rates. Again, remember affordability I talked about. Lower interest rates created a more affordable environment. Therefore, it pushed these income to price ratios, because if you're paying 7, 8, 10, 12% interest rates, you're not going to be able to afford as much. You can push yourself a little bit more in terms of the price of homes. So that's helped push the price of homes higher, and has helped our price to income ratios. Now, if I go down to Reno or the Washoe County, 61,155 was a median household income in 2018. In 2019, I just did a rough estimate of roughly $63,000, and the median home price is roughly 400. I think it's just under that, as we mentioned previously. That puts us at a ratio of 6.4. So you think, well, wait a minute, that's much higher than a national average. However, keep in mind our peak, the last bubble in 2007, 8, 9, Reno was well over 8 as a price to income ratio. And so obviously prices were right at actually a little higher than this, but the income was down into the 48 to 50,000 range. So do I think it's an issue? Yeah, I'm a little concerned about that 6.4, but I'm not overly concerned. I think it's definitely elevated, but I don't think it's going to be, I don't think it's indicative of a market getting ready to crash. Also, it's something that has me a little concerned we keep an eye on is total household debt. And if you look at this quick chart, the blue line is mortgage debt. And you can see back here in this gray area, it actually peaked out in 2008 and 9, mortgage debt here in the blue, and then everything kind of compressed. People started retiring debt, mortgage debt, credit card debt, and so on, and it dropped back in 2012, 13, 14 before rising again. And if you look now, we're slightly above where we were in 2008 or 9. A lot of people say, well, Ryan, isn't that concerning if our debt load as far as mortgages go? Keep in mind, back in 2008 and 9, the interest rate was around 6.5%, sometimes pushing 7. Here, our interest rate is 3.5 or 4. Big difference. So servicing that debt is more affordable, costs less per month to service that debt. So the debt load itself isn't as concerning. What is concerning, student loan debt has exploded, as I'm sure everybody's heard about in the headlines and so on. Credit card debt is still somewhat in check, but auto loans have exploded, student loans have exploded. So we're getting a lot of household debt. So that's concerning going forward with people having the ability to purchase a home. So the question is, where's the market going in 2020? I wish I had a more sensational headline for you or something to tell you other than I don't think we're going to see a whole lot more of the same as this year. Obviously, any black swan event that would cause some sort of turmoil in the economy would cause prices, and interest rates to shoot up would be an issue. So I don't think interest rates are going anywhere. Election year, I would expect more of the same. The biggest challenge is going to be, it's a story of price range. If you're thinking about selling your home, it really is about price range. If you're in that 300 less or even 400 less, under 400,000 mark, you're going to have a really good chance of selling pretty much anywhere in town. The home is priced competitively and right, and it's in good condition. Your home is going to sell under 400 because there's just not a lot of options out there for people. That's really where the affordability starts to get out of reach for a lot of people. If you're in the $400,000, $500,000, $600,000, $700,000 price range and up, that's where it's going to be a little more challenging. That's not to say you can't sell your home, but there's a lot more competition. There's a lot of homes on the market in that price range, so you need to be very aware of your competition. You need to price your home maybe a little bit more aggressively, and you need to potentially be a little bit more patient when it comes to selling your property. So, as always, if you want more information, you have questions about your specific situation, your home, and so on, please don't hesitate to reach out. It's info@forrenohomes.com. You can also visit our website, forrenohomes.com. Put a comment below if you'd like more information. You can also direct message us right here on Facebook. Until next time, this is Assist SL Reno Spark signing off. We look forward to hearing from you soon, and Happy New Year. I'm not doing it again. It's over.